Hi, I'm Jessica Amir for the Finance News Network. Joining me from Bankorus is CEO and co-founder Greg Vanderberg. Hi Greg, welcome.
Thank you so much for having me.
Can you just explain what Bankorus actually is?
Bankorus is the world's first AI-based platform for private wealth management built on the blockchain. It's a marketplace for high-net-worth individuals to access crypto, primarily security tokens. We're based in Asia, and currently our software is already being used for the past 4 years by over 200,000 private wealth management firms. We're the market leader in China for private wealth management software, and our software every day handles around $30 billion.
And I believe you've already got some of China's top advisory firms on board.
NOAH Wealth Management, which is listed on the New York Stock Exchange under the ticker NOAH. They're the largest private wealth management firm in China, and so all of their advisors, as well as clients, and people internally are using a piece of software that we've developed to manage their risk, manage their portfolio analysis, etc.
Greg, now to the I.C.O. itself. How much are you looking to raise? How's the process going? And how can people get involved?
We're an I.C.O. that focuses on the security token space. It's a very fast-growing space. However, there are only a few I.C.O.s that have focused on that. All of them were extremely successful. There is Polymath, which recently listed. They've raised $85 million and are currently listed at a $1 billion valuation. We will only be raising $35 million at a $135 million valuation. And currently, we are selling our token for about 13 cents per token. For people who would like to get involved, please go to our Telegram group chat. It's t.me/Bankorus, Bankorus, like dinosaurs.
Greg, to the coin itself, how will it actually be used?
Our first use case is the Bankorus token is used as the main network currency within the market space, within the platform. So we use the token to pay different vendors that take care of ID verification, accreditation of investors in our own token, as well as the users can pay for the transaction fees with our token and will receive initially a 50% discount when they use our token. Secondly, we, similar to a private bank, have different tiers of membership, and members will get first access to new products, different benefits, different concierge services, depending on what level they are in. Thirdly, every single quarter, we take 20% of all the net transaction fees and make it available to the token holders who have made in the last quarter at least 3 transactions to claim back the fees.
That's very innovative indeed. So how will the proceeds from the raising be used?
Primarily, we'll use it for 2 ways. One is to build out the platform, build out the product and the technology, and the second way is to go global. Initially across Asia and then later on to other continents as well.
Now to who's been backing Bankorus, you've already got some famous names on board. Tell us about that.
There are a lot of great supporters. The key ones are JD.com, which is the 3rd largest internet company in the world by revenue. It's the Amazon of China. They have over 266 million customers using JD.com, and they, together with us, are building an accelerator for the blockchain. A second great supporter is the former CEO of Morgan Stanley's private bank. So Morgan Stanley is one of the largest private banks in the world with over $3 trillion of management. And the former CEO of the private bank of Morgan Stanley is an investor as well as an advisor to us.
Greg, there's thousands of I.C.O. projects, all with varying levels of risk. But just explain why Bankorus is so unique.
First of all, we're an existing business. We've been operating for over 4 years, and we're the market leader in our niche. We have 200,000 family offices worldwide that are using our software day by day, as well as our software handles over $30 billion of assets under management. Secondly, we are an experienced team. My co-founder, I.C.O, he before built out Standard Chartered for 10 years in China to one of the top foreign banks in private wealth management in Asia, as well as he was the acting head of wealth management for Credities, and he built that Credities, which started out as a peer-to-peer platform, the first one of its kind in China, into the 2nd largest private wealth management firm in China. And so we're very happy that he is on board as well, and several people with a track record of success of doing this.
Another general question, what's the size of the market opportunity?
Currently, the total wealth of high net worth individuals is over 60 trillion US dollars. The amount of that that's currently in crypto is only $50 billion. So there's a huge amount of money waiting to be moved into crypto, whether it's utility tokens like Bitcoin or Ethereum, and especially security tokens. Because security tokens that have an actual asset as an underlying, such as real estate, private equity, venture capital, are what makes private wealth management firms very, very interested in moving a lot of assets of their clients into crypto, because a security token is the most trustworthy, efficient, and liquid way for people to buy products and handle your investments.
Last question, Greg. What can participants expect in 2018 and beyond?
For 2018, our goal is to be the main security token platform for high net worth individuals, especially focused on Asia. Beyond that, the key vision that we have is that you, as an individual, can own your entire wealth in the form of tokens, whether it's security tokens or digital tokens. And Bankorus, as the main platform, the one-stop shop where you can buy as well as manage your entire wealth.
Well, Greg Vanderberg, thank you so much for your time and good luck with the I.C.O.
Thank you very much for inviting me.
Get over to robo-advisors. That's AI-powered automated investment advice and trading programs. They're expected to manage billions of dollars worth of assets by the end of the year. I.C.O created the first robo-advisor in China, and CEO Gregory Vanderberg joins us now from Beijing. Gregory, great to have you. Some pretty exciting, interesting, also confusing things happening in the AI space, right? Particularly when it comes to what China is trying to do. Give us the big picture about the opportunities and also, we're going to have to talk about some of the risks as well.
Excellent. Yeah, for artificial intelligence in financial services, financial technology previously, the actual disruption in China was primarily on the sales channel. Things like the asset origination with blockchain, et cetera, hasn't really started yet. And also the middle office, back office, and front office, technology hasn't really disrupted it. Now that AI is getting good enough to take over a lot of the roles that a risk manager is doing, a portfolio manager, we will see more and more automation of the entire financial services value chain coming in China. And this brings a lot of opportunity for China, also for the private wealth managers that serve the high net worth individuals that are now moving more and more into more complex products with more risk. And so they will require a lot of AI to manage that risk and manage that diversity of products. Just to give you an example, currently a private wealth manager in China on average manages only 30 to 40 high net worth individual clients. With AI, with our machine learning models, we can make this 100 to 200 clients per wealth manager. So this brings a lot of opportunities for the industry.
Gregory, talk to me about the idea of having, a robot investment advisor, right? How does that actually work?
It's a good question. How it works is, say, a little bit like everything that now, imagine you're a wealthy person and you have a family office, you have a variety of people that would do your research, that would choose your investments, that would execute, that would link with brokerages. All these manual parts will be done by a robot, an automated thing. So it would be from the selection side to actually asset origination. So everything will be done by a robot. That is what robo-advisor is about.
What are some of the challenges, right? I mean, policy would strike me as one of them, because it does feel like policy making, some of these crackdowns, restrictions, it's obviously an area of technology that's changing so quickly. Is there a sense that Chinese policymakers are concerned about being able to keep up?
Yeah, absolutely. We are in deep talks with the regulator on an almost monthly basis. The regulators are really, the key thing what the regulators want is for stability in the market and for transparency in the market. And so what they don't want is some kind of a algorithm, Terminator algorithm running loose and sort of taking over market and causing crashes. What they want is full transparency in a lot of the algorithms that are used, and they also want to create a regulatory framework in terms of what is the best practice in terms of risk management, in terms of onboarding of the right clients, which clients should be allowed to be trading with the robo-advisor and which ones should not be. And so these are some questions that currently the regulators and us are talking about.
What about the people investing in it in some of these financial institutions? It's a bit as though they are sure looking at this to reduce costs and for various other reasons such as efficiency, but ultimately, aren't they just like turkeys voting for Christmas, or should I say Thanksgiving?
Yeah, to some extent, that is that is correct. What you do see in the regulatory advisory space is that there's a disconnect between, on the one hand, people are rooting for more of a fully automated robo-advisory solution where everything will be automated, whereas on the other hand, robo-advisory combined with other technologies such as blockchain, where on different chains such as Ethereum or NEM, where the actual data of portfolios and the data of clients will be stored. You see a sort of disconnect between that, in that a lot of people are rooting for the robo-advisor, not like the Terminator, but like an Iron Man, where the actual person still calling the shots or making the models, putting the input of the model is a human. I think that's a model where the regulator and also high net worth individuals as well as retail investors are more and more rooting for. It is a fact now that more and more financial institutions and banks, we work with NOAA, are moving towards more and more robo-advisory solutions. And a key driver of that actually is the compliance that is put into place and putting a pressure on the existing models, because robo-advisors can reduce drastically the cost of compliance, the cost of the onboarding, the cost of KYC, AML, etc.
Absolutely, those are the obvious ones. But just as humans sometimes have a herd mentality, won't these, even though they're artificial intelligence, will even have more so of one? And what are the dangers and pitfalls there?
That's a good question, and a key way that a lot of people would like to tackle it is that robo-advisory is not a quant fund that tries to predict the market, that tries to outperform. Most of the strategies that are currently being used, and that these are also enforced by the government, are more passive strategies where the robo aspect is more about rebalancing a portfolio, following the market rather than trying to beat the market, trying to look for alpha. And as long as robo-advisors stay on that track, there's no danger of an Armageddon or different types of quant strategies trying to manipulate the market or trying to move the market in a way that the regulators do not like to see.
What are the opportunities for the Greater Bay Area with regard to this? You're suggesting that there is some synergies between what Guangzhou and Shenzhen do and what Hong Kong does, for instance.
Yeah, I think that's a marriage made in heaven. The reason why is Hong Kong, brings up the capital, brings up the financial expertise, brings up the international angle, and on the other hand, you have Shenzhen, Guangzhou as sort of the hardware capitals of China. And the reason why this is important is data, or AI, is nothing without the data. And we live in a world now that most of the data comes from sensors, comes from Internet of Things, comes from hardware. And so if you connect really the hardware capitals of the world, of China, Shenzhen, Guangzhou, together with the financial place of Hong Kong, you really have a match made in heaven, because you have great data by which you can predict what the market would do. Yeah. So this is really something that is a match made in heaven.
Gregory, great talking to you. Gregory Vandenberg there. He's from Mitsai, I should say, there joining us from Beijing.